Hey folks, welcome back to this edition of Ben's Bits. We're so happy you could join us this week. We're going to begin a series that deals with really the purpose of why we invest in what we invest in and how that correlates to how we invest with what matters most. And we'll be covering all kinds of topics like income versus growth, the difference between a right fit versus a quick fix. That's going to be a good one. You'll really enjoy that one. But just for today, we're going to be focusing on investing to support what matters most. And this really goes back to the old adage, keeping the main thing the main thing. If you're investing for cash flow, then you'll want to focus on investments that focus on giving you the maximum amount of cash flow every month. And I know we've spoken about it before, but that's really the point of the note versus the rental video that we have on this channel. I've said it before, and I'll briefly touch on it, that this week that rentals have their place. But if you're investing in rentals for cash flow, and that's your main thing, then you may want to rethink if that's truly the best investment for your portfolio, because you're losing the most of the very thing that you acquired the particular investment for in the first place. If wealth building is your main thing, then you really have to evaluate investments based on whether they're going to be the best for moving you in that direction. The point at the granular level this week really is that, I have many conversations with people where they have a list of things that they're investing for, legacy, time, cash flow, wealth, the wish list, as I call it. And they're investing in all these things, but some of the vehicles they choose, they're just not synergistic with their portfolio. And it's costing them a lot of time and headaches along the way. My mentor once told me, it's not the novice or undisciplined investor that's going to throw it all out there and see what sticks and then figure it out, right? The issue is that there's a lot of people out there, and most of them are just retelling what another unsophisticated investor told them. Think of it like this. Ben, I want to build a house with these particular specs. So you go out there and you hire a bunch of vendors or contractors to come in and they do their prospective jobs all at once. But now that's a very inefficient way of building. They'd all be working over each other, and it would take longer to build than it would be just with starting with the foundation and building in a particular order. And the point of the analogy is this. Really look at what your priority is. And then once that's defined, work towards completing it. And then you'll know you've reached the goal when it's operating very well and it's surpassing what your original goal was. Far too often I hear of investors taking way longer than to hit their goal than what it should, because they fail at the most important thing at the beginning of their investing journey. And that's simply keeping the most money working for you as possible so that you can build out from there. So that's it for this edition of Ben's Bits. We'll see you next week when we discuss income versus growth. Talk to you soon.